A wise man once said, "History does not repeat itself, but it does rhyme." And as a trader and an investor, I believe that it's my responsibility to use history to my advantage and to use all the historical data that I have available to me in order to weigh the odds in my favor. In this video, we're going to be taking a look at the S&P 500 historical monthly returns dating back almost a century to tell us what happens in the month of September and how we can use this information to our advantage. I also want to talk about the month of August. I want to reflect on the past couple of weeks and how crazy they've been and why I believe that'll play into the volatility that we'll probably be seeing in the month of September. Okay? And then, as far as trades are concerned, as far as protecting your wealth and potentially even making a profit is concerned, I want to talk about hedging. I want to talk about some of the puts that I personally have in my portfolio. But on a brighter note, I also want to talk about some of the call options that I have, or some of the long positions that I have, some of the areas in the market that I think can outperform even if the S&P 500 and NASDAQ do fall. The diamonds in the rough and, over Waves Capital, that's what we always do our best to do. So before we get to reading, please give the video a like. If you do go on to gain value from it today, share it with a friend. Let me know in the comments down below what you think about the month ahead, how you're trading it, how you're playing it, how you're thinking about it. And of course, if you do want to know how I'm personally trading my portfolio, all the call options and put options that I was just mentioning and how I'm altering them on a daily basis, that's going to be the first link in the description of the video. Join the winning team. We've had a great month behind us, and I'm really excited to see what the month of September has in store. Feeling very confident in the performance of the portfolio, and let's hope that we can relay some of the wins that we saw in August into the month ahead. You can choose from any of these pricing plans, $50 a month, $40 for every 3 months. It's completely up to you. Doesn't matter to me, but give it a shot. You can always unsubscribe if you're unhappy with the product, but I'm very proud to say that that is a rare occurrence. And I look forward to having you on the winning team. Once again, it's the first link in the description of this video. Welcome to the team if you sign up, and if not, no worries at all. I appreciate you watching this video. So, once again, we have this data in front of us that I actually want to reference after we reflect on the month behind us. Once again, let's look back on the month of August, talk about how crazy it was. That was probably one of the craziest months that I can recall in recent memory, probably over the past since 2020, since all the COVID stuff happens, we saw the highest levels of volatility. So I want to read over the newsletter that I sent out. This is, of course, also a part of the portfolio. It's the Portfolio Trader newsletter product is what is included in this. But I just included a lot of my thoughts about the month behind us and the month ahead of us. And this will help to just summarize my monthly thesis so that I'm not just rambling all over the place. Okay, so we have a 3-day weekend. Currently recording this on that 3-day weekend. On the other side of this weekend is the new month of September. So August was a weird one. We kicked off the month with one of the largest crashes in years. We went on to have one of the most impressive relief rallies in years. And now, well, that's the question. This macro environment is tricky. The bulls could argue that earnings have been decent and a rate cut is coming, so the markets should continue to rally. But at the same time, the bears could respond by saying that stocks are still overpriced relative to their earnings and guidance, and that the September rate cut has already been completely priced into the markets. Both seem like valid arguments. And you can see here that I reference the chart we're going to look at. And actually, I'll close this out so we can look at both of the charts included in this research paper by Yardeni Research. Great research tool. Yardeni Research, if you guys are unfamiliar, I would highly recommend checking them out. Okay? So, this is important, and that's why I have it underlined. I'm a trader, not a fortune teller. I have no idea what the markets will choose to do, which is why we need to use historical data to help us out. The chart above, the chart that I just explained, and we're going to look at after this, is from Yardeni Research. And in this chart, we can see that the S&P 500 has averaged a loss of 1.17% using, again, nearly a century of data. So let's just take a look at it here and expand it. You can see here, once again, S&P 500, this top one, number of up months from 1928 to 2024. And that kind of, you guys can just pause the video. I recommend pausing the video here and just zooming in on this. Or just taking a close look at it and analyzing it, because this doesn't only apply to the month of September. This applies to every month of the year. And this can be used to your advantage. And that's why this chart specifically is very important. There are always going to be micro factors involved. There are always, it's an election year. There's a lot going on geopolitically. There are always going to be external factors at play that will remind us of why, again, history is never guaranteed to repeat itself. It's unlikely to ever directly repeat itself. But again, it does rhyme. There is some rhyme and a reason to the madness that is history, and especially the madness that is the markets, which is why this charts are really important. So again, I recommend you guys check this out. I will put the link that I have in the newsletter right here in the description of this video so you guys can save it. Just save it to your favorites because, again, this will come in handy year-round as we enter every month, okay? So, again, right next, right here, you can see that in September, the S&P 500 up top here has averaged a 1.17% decline. That is by far, move my fat head for a second, that's by far the worst performing month of the year. You can see most months have a net positive return. A couple months are flat. September is really the only month where the S&P 500 has averaged a down month. And that's pretty significant as well. That's equally as significant as the returns we typically see in the month of January, okay? So, again, it's always possible that we climb 1-2%. Who knows? But as I alluded to in the beginning of this video, considering August was such a crazy month, and we came from a massive sell-off, kind of the modern Black Monday crash at the beginning of August, to such a crazy relief rally into borderline what I would consider to be, and I do consider to be, and that's reflected in my put options, an overbought market environment coming out of such a crazy sell-off, heading into a historically bearish month. I mean, just taking all those into an equation, it equates to me being pretty bearish. Okay, so history is never guaranteed to repeat itself, but I definitely say that this research proves that the bears have the odds in their favor in the month of September. And as a betting man, I'll take any edge that I can get. So sharpen those teeth and get ready, team. I trust that we'll have plenty of put profits to shark up some longer-term call options with in the weeks ahead. Okay. So again, below this, I'll just give you guys. I'll just give you guys a glimpse into what the portfolio looks like if you do want to join Waves Capital. If you want to join my complete portfolio and newsletter subscription service, if you want to become a member of the team. Okay. This is what it looks like. Below this is a list of quite a few more call options and more put options, which currently consume 30% of my portfolio. As of close, it's about 75-25 because the market's kind of ripped right into the 3-day weekend. But that is what my portfolio currently looks, or that's just the breakdown of how these newsletters look. Below this is a few charts giving my price targets. And I do my best to make this worth your while and more than worth the $15 a month that you pay for it. So last plug, it's the first link in the description if you want to sign up, if you want to become a member of Waves Capital for real. Again, appreciate it if you do. If not, no worries. Let's talk about how I'm hedging this market. So again, I'm not going to give specific put options. I'm not going to give the specific contracts that I'm having or the specific contracts that I'm trading, just in respect of existing members of the portfolio group. But I will say that there are two names that I'm heavily shorting right now. Those are SOXL. That is the Direxion Daily Semiconductor Bull 3X Share ETF, and SMCI, which is Super Microcomputer. They just had a pretty massive short report on them following a delay of their earnings report. And in my mind, those are two incredibly bearish factors that play into what is, in my opinion, this is a very classic bubble pop. I called Nvidia a bubble pop. That's why I put it in quotations, because Nvidia, again, that company is going to be around a century from now probably. But SMCI, this seems shady. Everything about this seems shady after reading the short report. Pretty shady. So again, I'm not recommending that you short SMCI. It is a very dangerous play to short. But personally, I'm short them in SOXL. If you just want to short the S&P 500, I would buy put options on SPXL. The NASDAQ 100 is put options on the TQQQ. And these are 3x leverage ETFs of the S&P 500 and of the NASDAQ 100. Okay. And that I've traded these puts many times in the past. Recently, we've made some very impressive returns off of these puts over at Waves Capital. But right now, I'm pretty much primarily have put options on the two that I just discussed. Fun stuff. Okay, I'm just going to rapid fire these. I'm not going to look at the charts once again out of respect for just kind of like the newsletter group. I am bullish on small caps. Surprise, surprise. If you've been following along, you would know that. I'm bullish on the IWM or the Russell 2000 small cap index. I think that it's very likely, given interest rate cuts on the horizon, given the seasonality that's involved with just small caps and large caps, and given the historical undervaluations or relatively lower valuations, historically speaking, of small caps to mega caps and large caps. So like historically speaking, from a forward PE basis, the Russell 2000 is still significantly undervalued relative to the S&P 500 and NASDAQ. You could say that they're overvalued and maybe the Russell is fairly valued. But relatively speaking, when comparing the two, there should be some parity. There should be some mean reversion involved there, okay? And that's why I do think the Russell 2000 can actually continue to climb. Maybe not rip higher, but climb higher, even in the case of the S&P 500 and NASDAQ 100 fall, okay? I'm bullish on Palantir. Palantir, we played it over, like in the portfolio, we played their earnings report at the beginning of the month amazingly. Got out with some profits. I actually just repurchased this dip buy 2 days ago. Already looking pretty strong. And I do think that Palantir, as a company showing very impressive growth, and just it's still an AI play. It's big enough for funds to get in. It's an exciting stock that I think a lot of big money is gravitating towards, and that's really what is important when you're talking about appreciation of price. So I'm bullish on Palantir as well. And lastly, Veritone, it is a little diamond in the rough, and I think that Veritone has such a bright future ahead of it. Again, maybe the week ahead isn't too crazy, but when it comes to the months ahead and maybe going into even early 2025, I think that this thing has crazy potential, and that's why I have a whole bunch of call options on it, okay? So always know, you guys, my money is where my mouth is. I have call options on the Russell 2000 IWM, Palantir, and Veritone. I have put options on SOXL and SMCI, and I look forward to see what they can do in the month ahead. Last time, join the club. If you're not, what are you waiting for? Give it a shot. Again, you can always unsubscribe if you're unhappy. But again, it's been a good month. I'm excited for what the month has in store for Waves Capital. And even if you guys are just watching the videos, that's perfectly fine. I look forward to talking to you in the comments, and I look forward, to making waves in the month ahead. So I hope you guys have a great 3-day weekend. Some of you guys may be watching it after this. Hope you had a great 3-day weekend. And I hope you make some money in the month of September. Cheers, you guys. Until next time, always remember, take action, make waves. Peace.